Stationery Express is a company that sells stationery and office consumables to a variety of customers. They are registered for VAT. We have to assume a VAT rate of 14%. Important. They also do business with other VAT vendors. They apply the perpetual inventory system, and the bookkeeper of the entity is inexperienced, and you were approached for help in order to solve the following matter. Now, Stationery Express and Pens and All Sorts trade with one another on a regular basis. Stationery Express wants to develop close ties with their debtors and therefore offers the following settlement discounts. 5% settlement discount if the client is going to settle within 15 days of the invoice date. Then it is 5%. 2% settlement discount if the client settles within 25 days of the invoice date. And 1% settlement discount if the client is going to be settled, the account's going to settle 30 days of the invoice date. So I've got a sliding scale here. It is the policy of Stationery Express. Now, this is important words because you are going to apply a policy all the time. It is the policy of Stationery Express to provide for settlement discounts by creating an allowance account. From past experience, it was found that most debtors make use of at least 1% settlement discount offered, so within the 30 days period. So if that was found through statistics, you can assume that the expectation is that when a sales transaction takes place, that debtor is going to pay within the 30 days period, so therefore a 1% settlement discount allowance have to be created. Then the following transactions are presented, and they want you to record all the transactions in the general journal of Stationery Express. Cost of sales journals may be ignored. Good. On the 1st of February, Stationery Express sells goods worth 51,300 inclusive of VAT to Pens and All Sorts. A trade discount of 5% is granted. So that is the normal selling price. What is step number 1? Step number 1, determine the invoice value. The invoice value is 95% of 51,300 Rand, i.e. 48,735. Determine the VAT exclusive amount. 48,735 divided by 1.14, 42,715. Break it down in its two legs. So what is the expectation? 1% of debtors will make use of the settlement discount. So 1% of the VAT exclusive amount will go to my allowance for settlement discount account. And 99% of the VAT exclusive amount will go to our sales, 42,323. This one here is just to show you if I've taken out the VAT first, it would have been 45,000. Then apply the 95%, it would have given me the same VAT exclusive amount, 42,750, which I'm breaking down to the 99% and the 1%. So it's exactly the same. The invoice value will be posted to the debtors control account. So the invoice value we've established is 48,735 Rand. The VAT on this invoice is the difference between the 48 and the 42, which equals then 5985. So VAT output, credit 5985. Allowance for settlement discount is the 1%, the 428. Credit, and sales will be credited with 99% of the VAT exclusive amount, 42,323. And you can check yourself by adding those three together, and it must bring you back to the 48,735. On the 24th of February, Pens and All Sorts paid the account relating to the 1st of February in full. So on the 24th of February, it's 23 days later on, they are paying the invoice. Now within 23 days, they are entitled on a 2% settlement discount. So the amount that they're going to pay is the invoice value multiplied by 98%. The invoice value was 48,735 multiplied by 98%, and that is going to be the amount we receive into our bank account. What is the amount that we want to clear out of the debtors control account? We want to clear 48,735. So we're going to credit the debtors control account with 48,735. What is the VAT inclusive discount that we have actually granted to this guy? That's the 48,735 less the 47,760. And that equals an amount of 975 Rand. Of that, we know what is the VAT. 975 divided by 1.14 multiplied by 0.14 gives me a VAT amount of 120 Rand. So VAT input 120 Rand. I have 1% VAT exclusive in the kitty in my allowance account, so that I have to remove out of my books now because settlement has taken place. So I'm going to debit the allowance for settlement discount account with 428. But then I need a similar amount for the rest. So a similar amount for the rest equals 427. This is just rounding, and that will go against our sales account. So we've said that the total VAT exclusive amount or the total VAT inclusive amount of the discount is the difference between those two. I've taken out the VAT, and once I've taken out the VAT, the remainder of the amount equals then 2% of the VAT exclusive invoice value. 1% is already in my allowance account, so I take that out of the allowance account, and the other 1% I have to take out of my sales account. On the 1st of March, Pens and All Sorts sends goods with 17,100 Rand, inclusive of VAT and before discounts, back to Stationery Express. The goods were purchased on 1 February and has already been paid for, but do not match the description on the order form. Stationery Express agreed to take the goods back and compensate Pens and All Sorts by crediting the account with the necessary difference. So they're not going to give them cash back, they're only going to put the credit back on the account, so when they're going to buy again, obviously they can utilize the credit. Now here the first step is the same as with the sales transaction. The only difference is here you have to determine what is the value of the credit note issued. Now the value of the credit note issued is not 17,100 Rand. It's 17,100 Rand before discounts. Remember, they've already paid the account. So I'm not going to give them 100%. Well, obviously, I have to deduct 5% trade discount. That is the obvious thing. So that is not a difficult one. But when they actually paid us, that's already been paid, they made use of a 2% settlement discount, which I've already granted them. So therefore, I must deduct 2% further from this amount for credit note purposes. That is the amount that they've already utilized. Why? Because I'm not going to give them more credit as the amount that they have paid me. So let's determine firstly what is the credit note amount. The credit note inclusive 17,100, take out the VAT is 15,000. And if I take out the trade discount, 15,000 times 95%, it is 14,250 Rand exclusive of VAT and exclusive of the trade discount. Now, they have settled already the bill and they've utilized a 2% settlement discount. So therefore, this amount of 14,250, I'm going to reduce with a further 2%, i.e. the settlement discount that they have actually utilized. So the credit note is only going to be multiplied by 98% of the 14,250. So the 13,965 would be the credit note amount exclusive of discounts and exclusive of VAT. I've removed the VAT in this whole scenario. So that amount will go against my sales. I can debit sales return, so I can debit sales straight away with the 39.65, the VAT exclusive amount. VAT is going to be then obviously 14% on the 13,965. So 13,965 times 14% will give us 1,955. The total amount of the credit note will be the VAT exclusive amount plus the VAT, and that equals then 15,920 Rand. You could have also worked it out and took a shortcut and said, well, the 17,100 Rand is, where is that? 17,100 Rand includes VAT and it excludes discounts. So the VAT is already inclusive there. So if I'm going to exclude the discounts, it's multiplied by 95% to exclude the 5% trade discount, multiplied by 98% to exclude the 2% settlement discount. So the value of the credit note will be a VAT inclusive value is 15,920. And then you could have said, well, 15,920 divided by 1.14 is going to be the sales figure or the sales returns figure, 39.65, and that multiplied by 14% will bring me back to my VAT on that credit note.